Atul Goyal of Brigade Enterprises is joining us right now on the show to take us through how the quarter gone by has been. Mr. Goyal, thanks very much for taking out the time. You know, while obviously there have been various other aspects that have aided the bottom line, including the likes of another income component, there has been a share of profits from associates which was up by about 3.5 times. In the base quarter, there was an added expense. But the key factor remaining that the top line and the revenue growth has been a strong 75%. How was that achieved?
Yeah, thanks. See, revenue top line has been good, and it is not in real estate segment. It has been good in hospitality as well as the leasing segment. Hospitality, real estate sector has been, I think, doing well. It has been improving, and if you see overall inventory, unsold inventory has also come down in the market, and inventory overhang has also reduced from 46 to 15 months. So we are very hopeful, and we hope to continue this run rate in further quarters, in coming quarters also.
Could you give us any indication of what you're targeting for the upcoming year in terms of the amount you're looking to sell in terms of million square feet? I believe you've crossed your previous target of 2.8 million square feet already for the year. You're clocking 2.97 million square feet. Is there any incremental target that you're placing out for yourself for the upcoming year?
See, we are targeting around 30-35% growth in coming year in our residential sales, and we are launching around 5.5 million square feet of residential in next year, which will be a combination of affordable housing, mid-income housing, and a luxury housing, which we are going to do in our Chennai property, which is with GIC in WTC, near WTC Chennai.
Okay. Could you let us know how you're expecting the overall demand scenario, and in terms of pricing, whether or not there is a pressure for developers like yourself to bring down those prices, rather, some incremental discounts that you could probably look at giving out?
See, if you see in South India, the prices have not dropped so much, so it has been stable, and I think that stability in prices will go. I don't expect much increase in prices. Prices may increase by 5% going ahead, which will be also mainly due to the GST rate, which is now 1 and 5%, where input credit is not available. So prices may go account, or for that matter, developers will increase the price to offset that extra GST cost. But overall, market has an absorption, and I think the growth which we are targeting, market should absorb.
We just did a discussion in the morning where there was a Knight Frank report that was put out that suggested that while some prices have been coming off, the demand in terms of the square foot area of residential properties has gone down as well. Are you seeing this segmental breakup there in terms of what kind of properties are moving faster and the inventory is going off at a faster pace?
Yeah. So, inventory which are going today is affordable housing and mid-income housing, which is in the target of, say, less than 1.2 crores. So that is going very fast. Luxury housing, yes, there has been slow. I have not seen the Knight Frank report, but I think they are combining all India reports. So you have a majority of luxury housing in Mumbai and NCR where the growth there has been degrowth in luxury housing. But mid-income housing and affordable housing is the area which has been growing very fast, and I think it should grow rapidly also in future.
Okay, let's talk about the leasing business, Mr. Goyal, and how is that done for the quarter? And going forward, any comments with regards to yields and the movement thereabout?
See, leasing business have done very, very well. I think our EBITDA margins have increased to 68% from 63% from the last quarter. And we are in our operational properties, we still continue with a high rate of leasing. And I think now, since two big properties of 5.5 million is coming coming in this year because of the SEZ sunset clause, which is till by 31st March 2019. So we are doing a aggressive leasing there, and we are getting very good response both for Tech Garden Bangalore and WTC Chennai. So I think our leasing will be very, very prominent in coming year, and we should have a target. We think that the run rate of leasing may be around 0.8 to 0.9 million per quarter, which we'll be doing.
Okay. One last question, Mr. Goyal, before we wrap up this interview. It's going to be on your debt, and I think it stands at closer to 3,000 odd crores. Any plans of bringing that down?
No, see, the debt will not go down because, see, we are into the capex phase right now, both in hospitality and leasing, and I still have around 14-15 crores of capex which has to be done. Out of which, of course, half of this will be the equity infusion both by us and the GIC, but around 750 to 800 crores infusion will be there in this leasing and hospitality, majority in the leasing, which will bear fruit from next year. So I think that is not going to come down, but from next year, all this leasing debt will also get converted into LRD, so which will be at lower rate and which should be more efficient for our balance sheet.
Yes, so servicing that debt will become easier. The quantum of the debt may not reduce.
Yeah.
Okay, Mr. Goyal, thank you very much for joining us. Really appreciate you taking out the time.